So we move to part 3 of chapter 8, cost classification. I hope that the first two parts have made sense to you. In this particular part, we're going to move on to areas that are perhaps more examinable than parts 1 and 2, in particular the high-low method. So watch out for that. That's an area that the MA examiner really likes. That's right at the end. So let's kick off on this next part. Really, you heard from section 3 in video 2, part 2, that we were talking about really classification of costs and indeed introducing cost behavior. So really, what we're talking about is the way in which costs move. And indeed, to understand that, we need to understand the various different costs that, let's say, a manufacturing business can incur. So, if we're producing a particular product, it's highly likely that we're going to have some variable costs, i.e. costs that move with directly the level of production. We're going to have some fixed costs, i.e. costs that are static. They do not change, not linked into production. And indeed, some semi-variable, which is a combination of both, and indeed some stepped fixed costs. Now, if these terms don't make any sense right just now, even though you've been through the study hub, don't worry, we'll open them up by looking at the diagrams in a moment. So really, this area of cost behavior is important for us because, if we can understand how costs behave, then that helps us to go some way towards actually predicting costs down the line and in the future. So, first area, variable costs. Now, they do what they say on the tin, really. Variable costs are costs that are directly in line with changes in activity level. So they change or vary directly with activity. Now, very, very simple diagram here. You've seen this within the study hub. We've got total costs on the y-axis, output on the x-axis increasing. And you see here that we have a gradient line. So really, we're talking here, let's say, as an example, $40 per unit. Now, when we look at the material, we see that this particular company manufactures a product, takes 4 hours to make, and each hour costs $10. So, in essence, when we think about it, if we were to produce 10 units, then we'd be talking about 10 times 10, 4 hours, 400. 20 units, basically double that. And that's referenced by the diagram. As is, if we were to produce nil units, i.e. the cost is going to be nil because the output and indeed the total cost will be right here. So that's a simple sort of manifestation diagrammatically of variable costs. Let's move on to fixed costs. Now again, quite straightforward. We're talking about a cost that is basically the same. So if you imagine again for a manufacturing organization, perhaps rent costs are the same regardless of the level of activity. The rent will be the same each year, let's say 500,000, regardless of whether or not we produce 1 million, 10 million, 20 million. So the level of output is not relevant, again as represented by the diagram, total cost on the y-axis, output on the x-axis. Basically, we've got a company paying insurance, let's say, of $5,000 each year. It's not going to change with the level of output. Let's move to the next area for us. Now, this is obviously an element of common sense. We're talking about total fixed costs per unit. So, looking at the graph or thinking about the graph above, if the total fixed cost, let's say, of 200 per week remains constant, then the fixed cost per unit certainly falls as the activity level rises. In other words, albeit for the fact that fixed costs are the same period on period, if we were to link fixed costs with activity levels, then obviously the fixed cost per unit, per each unit, is going to fall, as we rise. In terms of semi-variable costs, again, quite straightforward here. We're talking about a cost that is simply partly fixed and partly variable. And we'll see when we look at the diagram that really it's quite straightforward. You know, in one sense, if you think about the example of, let's say, mobile service or electricity, generally speaking, there's going to be some sort of charge for usage, some sort of fixed charge, and indeed a variable element. And you can see that represented quite clearly by the diagram. You see at a given level of output, i.e. 0, or indeed moving towards the output increasing, we see the fixed cost line at a certain level regardless. So even at 0 output, we have a fixed cost. Outside of that, we see the variable element rising over time. So in essence, this is slightly unusual, I guess, because it combines both the elements. Now, the definitions are important because they're leading us to what I mentioned from the off the high-low method. The examiner is going to put you in a position where you need to basically, let's say, with a semi-variable cost, extract the fixed cost element. So it's important that you know what you're talking about. Let's move to the next area, stepped fixed cost. So in terms of a definition, what we're talking about is really a cost that is fixed within a certain range of output or activity and increases to a higher fixed constant when that range is exceeded. So again, looking at the diagram, you can see that what we're talking about here is really a set of steps. You can see that as the output increases from 0 to 10 to 20, you can see how the steps are in effect in line. So in terms of the example, if we look at warehouse space, we have company D can store up to 10,000 units in its warehouse, annual cost of 20,000. But an additional warehouse clearly would cost another 20,000. Okay, so they're maxed out at those units. This would be the stepped fixed cost. Okay, so that's sort of the four main costs. In terms of a summary of cost behavior, I've just taken this straight from the study hub. You'll note this is a very, very good little diagram. This is the sorts of thing that I would be rote learning, so that if I see questions, and there will be questions, narrative style questions for sure, you can just gobble them up. It's pretty straightforward. You know, we're talking about each of the various types of costs that we've walked through: fixed, variable, mixed, and indeed step, and indeed the relevance in terms of either the cost per unit or indeed the total cost. Okay? Not a difficult diagram to understand, but certainly one that we need to learn. Let's move on to this next and probably most important area of this final video on Chapter 8 cost classification, the high-low method. Now this is the area that we've been leading to, I guess, really from the off in part one. So what do we mean? Well, we're really talking about a sort of a technique that would enable us to identify fixed and variable elements of a semi-variable cost so that accurate predictions of costs can be made. You'll recall that earlier on I mentioned, well, you know, why do we need to classify costs into all these areas? Well, so that we can make informed decisions based on calculations. So what do we assume here? Well, certainly we assume a linear relationship. In other words, a direct relationship between total cost and indeed output in terms of this straight line equation. So y is equal to a plus bx. So b is the slope or gradient, the variable cost per unit, and a is the intercept on the y-axis. Now, if that doesn't make 100% sense right now, don't worry about it, because what you'll find is once you put this theory into practice, not just in the activities in the study hub if you haven't done that already, but also in the questions, you'll get jiggy, you'll get familiar with, you know, really how the M&A examiner attacks this area and the little twists and turns and little tricks. You know, the bottom line is this is really a fairly straightforward equation, and the questions are going to present themselves along the lines of the examiner is going to provide you with A, or provide you with B and X, or provide you with Y, and ask you to figure out the missing number. So in essence, what we're saying is that really the total cost TC is equal to the fixed cost FC plus the quantity times the variable cost. This little formula here is exactly the same as this. Okay, so that's the key points in terms of the introduction of this high-low method. A couple of other points. Note that in terms of step fixed cost, the process would be the same for semi-variable costs as described above, but just make sure that you choose the highest and lowest activity information for the activity levels where the fixed costs are the same. So in other words, what we're saying is that we saw above the formula being used to really decipher information in relation to semi-variable costs. Now what we're saying is, yes, we can also use it for step fixed cost, but be careful in terms of the activity levels you choose, ensuring that you choose the highest and the lowest for that fixed cost area. Okay? Now, in terms of using the method for a changing variable cost, again, this can be done. Okay, we can use this particular format to estimate the total fixed cost, even if the variable costs per unit are changing. Looking at the diagram, we see again, it's just a slightly more convoluted diagram than we saw up top. And we see in this particular case that we have fixed costs, the same at all activity levels, and also in effect a rising variable cost. So again, if we're going to be using this where we have a variable cost that's changing over time, ensure that we choose the highest and lowest activity information within the activity range where the variable costs are the same. Okay? Excuse me. So let's move from there. So in effect, what we've done in this particular video is really to focus in on probably what is the most examinable area across the three parts in cost classification. For me, it's the formula. And if you're struggling, maybe you're not, but if you are, as mentioned, the best way to get familiar with the high-low method is to use it, and also to fail in the questions, get them wrong, and then work through them. At the end of the day, it's simply an equation. We're going to be asked to fill in the blanks in some way, shape or form, whether it's Y, A, etc. Okay, I hope that helps and makes sense. Many thanks for listening.